everyone. I'm Brenda Butner, and this is Bulls and Bears. Those sky-high oil prices finally crashing back to earth, the biggest weekly drop in crude on record. As for the Dow, from Wednesday to Friday, it had its best three-day gain in over 5 years. So is the oil bubble bursting and a new bull market beginning? Let's find out in the trading pit. Here are the guys with the answers. The Bulls and Bears this week: Gary B. Smith, Tobin Smith, Eric Bowling, along with Matt McCall, and Peter Schiff, author of the book Crash Proof. Pat Dorsey will be back next week. Welcome to everybody. Okay, Gary B., oil bubble. Did it burst?
You know what, Brenda? I think so. And here's the reason. You know, a lot of the people either bullish on oil, or I guess the Bears would say, oh, this is just a pullback and it's ready to resume its run. I counter with one significant fact. If we just look at USO, the ETF that tracks, you know, essentially crude and other energy stuff, it had its biggest down week ever, Brenda. You know, normally you see kind of price/volume action like that at tops or bottoms. And in fact, if you flip it around on the other side, you look at the financials like Citi, like Bank of America, they had their biggest week volume-wise to the upside ever. So if we aren't seeing a change, certainly, you know, I think something significant is going on, and I'm bullish.
Well, it's hard for me to do the Toby shrug, but it's something like, you know, as you're talking. So go ahead.
Well, I look at, listen, I respect Gary a lot of these, you know, because he's looking at volume and everything else. I would look at the dollar. I mean, what was interesting is for oil to come down as much as it did and the dollar not to move very much. Everybody's been saying, oh, it's the dollar been driving, it's the dollar been driving. Well, guess what? It wasn't just the dollar driving it. I think, you know, Eric knows better than anybody. These guys who trade this stuff are technicians. I mean, they are technical traders, and we broke this 130, 131 line, and so that I would expect that we're going to get a pullback to the next sort of technical support. We have demand issues coming because China sort of built up, and now maybe after the Olympics we slow down. But the overall fundamental story has not broken. Whether traders go $10 one way or another, I would use it as a buying opportunity for the best energy companies, not a selling opportunity.
I don't know, Eric. You do know. You do know where it's going. Is it going up or down?
Well, I think it's going down. Let me give you a quick timeline. You know, President Bush came out and he lifted the presidential portion of the ban on offshore drilling. That was Monday. Tuesday, oil down $6.50. Wednesday, oil down $4. Thursday, oil down $5. We dropped $16 a barrel since he did that. Guys, guess what? As that was happening, the Dow rallied 400 points. So let's do it this way. See this? Oil up, economy down. Oil down, economy up. Things are good. The bubble is bursting. It hasn't burst yet. The air is coming out. I think we're going to see $100 barrel.
From the beginning of Bulls and Bears, we've said stock market uppy is goody, downy is baddie, and you just got it right there. All right. Matt, what do you say? Are you bull or bear? What do you think? Is this bull market starting and oil going down?
You know, I don't think oil, the bubble's burst. And I'm going to go to what Eric just said here with the economy. The only way this bubble bursts is if the global economy slows down, in my mind. As long as the global economy is still running, there's going to be demand for oil. So I think it stays above the 120 level. So I think this is just a natural pullback. Granted, it happened in 1 week, which you don't like to see as a technician. But longer term, I still think we're in an uptrend in oil, and we move higher.
Peter, there is a lot to push oil higher. You think that's where it's going, or is this bubble burst?
Well,
or is it even a bubble?
There is no oil bubble. There's nothing to burst. This is a bull market. It's being driven by solid supply and demand fundamentals, but also by the most inflationary monetary policies the world has ever seen. You know, it's hardly a crash. We're still at $130 a barrel. You know, we've had many corrections. I've been buying oil since it was under $20 a barrel. And every time it drops, people are saying, that's it, it's the top. It's never been the top. There's nothing different about this decline. Maybe it's a little bit sharper, but I mean, I think that's what it's meant to do. It's going to scare out the weak longs. You know, buy this dip. And as far as the stock market, it's the opposite. This is a bear market rally in stocks. It's a selling opportunity.
Peter, you forget to mention that you've been selling the stock market since it was about 5,000 also. I mean, you can't have it both ways. Look, oil's got to get under 100.
Yes, I can, because I've been buying foreign stocks, and I've been buying gold, and I've been buying oil. I was selling in 2000 when you guys were buying with both hands.
All right, not a commercial, Peter Schiff, but here we go. Gary B., answer Peter what he says. Nah, this isn't any bubble, and it's not bursting.
Well, you know, just a couple points, and I'll get back to something Matt said also. If he's been buying foreign companies, you know, he's had to be really selective. Those markets have gotten hammered as much as our market has this year, and
even more.
across the board. In fact, even more. As to the point that Matt made, can the economy keep growing, oil price go down? Look at the inflation-adjusted top back in about 1980. Oil sold off for years. In fact, it just recently, in the past year or so, reached that, inflation-adjusted high. And yet all during that time, that 25 years or so, our GDP and others, countries, kept marching upwards. So I'm not sure there's a one-to-one relationship.
Well, Eric, if oil goes down, gas goes down too, right? And that's got to help the cash-strapped consumers, which has got to help the economy.
Please, Brenda, we got $16 lower in oil. That translates almost 50 cents a gallon at the pump. If Congress pulls theirs, yes, it does, Peter. I'll do the math with you anytime you want. If Congress pulls theirs, we might get another $30 in oil. You're talking a $2.50 gallon at the pump. We need that.
Right, but you can't use the 1980s as the parallel for oil prices, because there was 1.8 billion people that weren't participating in using oil. I mean, we do have a new global economy, 1.8 billion new people, 100 million new people in the middle class every year. That consumption, going from 1 gallon of oil a year, 1 barrel of oil, to 2 barrels changes the whole demand curve. Yeah. You also have to say that if this was, if the speculators were driving this thing, do we supposed to now clap for the speculators and it's come down? Come on, this is demand.
Very quickly, I'm going to go around and ask you, is the stock market going up next week? Eric?
Up and away.
Matt?
Up and away, I agree.
Toby?
I think it goes right up to 12,000 stalls at the bear market rally.
Okay, Gary B?
I think we pause next week before continuing up.
Okay, and Peter, it's going down.
Well, I don't know. It might go up, but if it does, I'd sell it.
Okay, all right. Thanks, guys. That does it for the Trading Pitch.